I think you are going to start to see more multifamily development, right? Because that excess supply is going to get absorbed and vacancies are going to come down and that sort of thing. And then I can tell you a trend I'm seeing in my practice is a lot more of institutional joint ventures and JVs as a way to access capital.
What significant tax developments have you seen for REITs this year?
There hadn't been really any sort of huge developments, but there are a couple things that are worthy of note. First, with regard to taxable REIT subsidiaries or TRSs, those are C corporations where a REIT owns an interest and they make a joint election, and that TRS can provide non-customary services and engage in businesses that aren't permissible for REITs. The One Big Beautiful Bill Act changed the percentage of the REIT's total assets that can be comprised of TRS stock. It went from 20% to 25%. And I think this is significant. It'll allow REITs greater flexibility to use TRSs. It'll help to give them a competitive advantage when they're dealing with non-REIT competitors. So that's a significant one. Another one is the treatment of foreign investment in U.S. REITs. There was a rule that passed a couple years ago that forced REITs to look through C corporations that own stock if foreign investors own more than 50%. Very recently, IRS and Treasury put out proposed regulations that would eliminate that look-through rule. I think that'll be really significant. It'll simplify structures where you have foreign investment into domestically controlled REITs. It'll also facilitate foreign investment.
What trends have you seen impacting REITs in 2025?
Well, there's quite a bit, right? But one of the things is there's certain parts of the industry, the real estate industry, that are doing much better than others. Right now, data centers are really hot, right? It's AI-driven, 5G, digital infrastructure. I mean, it's just amazing how hot that sector is right now. The interesting thing I've seen is sort of access to capital, access to power. I mean, it's just a really hot area with a tremendous amount of demand. On the flip side, office is still suffering, demand's down, high vacancies, that sort of thing. And then sort of in between, multifamily, right? They had a lot of inventory that came online in the past couple of years, so there hadn't been a lot of new development, but there's still significant demand because of a housing shortage and everything else. And so multifamily, and then finally, my experience, retail, has been sort of looked down on for a long time, but retail, particularly high-end, seems to be doing really well.
And what trends do you expect to see in 2026?
Yeah, very similar. I think data centers are going to continue to be hot just because of this whole sort of digital revolution. I think you are going to start to see more multifamily development, right? Because that excess supply is going to get absorbed and vacancies are going to come down and that sort of thing. And then I can tell you a trend I'm seeing in my practice is a lot more of institutional joint ventures and JVs as a way to access capital. And so I think you're going to see institutional capital coming in. I think you're going to see some of those same areas, data centers, for example, being good, attractive investments for that capital. I'm hopeful that these changes in dealing with domestic REITs will help facilitate more foreign capital. You know, hopefully today we get a moderation of interest rates and we have a good year in 2026.